Hi, my name is Sam Wong. Hope all of you have a great weekend. Last week was an interesting week with market really have a lot of volatility for the intradays and then throughout the week. Just want to go through very quickly before I get to a recap on how the market looks like. You can see the 5 day chart actually. You can also run through yourself and open up any of the Yahoo or any finance website and just type in DJI, and you should ring it up. Then you can look at 1 day, which is obviously a rebound for Dow Jones up about 400 points for a day, and you can look at the 5 days trend. So this basically capturing that in the last 5 days, Dow was down 400 points, in which is 1.19% despite of the rebounding for the day Friday. Otherwise, will be gone down probably even more severe from the high end of close end. But you have to also look at notice that and the 52-week low is only 26,143. That's about 9,000 points, 8,000 points higher for the year, and you're still meaning despite the downward of 1% on the week, you're still about 30% higher of a year. So just something to put a note on. And the other snapshot, which I'm using a 1 month, because what happened was these indices pretty much were running through pretty same trend, except they may have flopped a couple of days. While Dow was up rebounding, maybe Nasdaq was still down because of the yield curve was higher and anticipated. But regardless, you look at the trend of the month for three index, which if you look at last week on my video, I was showing the month trend, and you can see that in over the month of September, all indices were actually were down, but not very significantly down. And you had have the upswing moment as well. So you could still make money off of it if you were day trades on a month. But if you look at you bought a stock and put index or start leaving in a month, you may still end up lower than what you bought at a month ago. But it wasn't probably not down a lot, but maybe a couple percent. And so just give you some sort of different aspect of looking at that, and now we get into the resistance point, support point later on. When I gone through the week what happened, and S&P 500 clearly, you see my circle here. So the market was actually also is down for the month, which is again all three indices were behaving in similar way, but you can see, Friday obviously was rebounding all the indices. So the anticipation is that, as I covered the V shape before, I probably anticipating if S&P 500 going to be rebounding and go back up again Monday, which actually at this point the futures looking pretty promising, but we really don't know until the Asian markets start trading. Then the futures will have a kind of look at it differently. We calculate as a market, the Asian people trading and putting in, and also the Europe. Then when the Euro market open later of the day on Monday, you will have a better picture of the futures reflecting what's going to happen in U.S. So just bear that in mind. But you can see that I'm anticipating that if you move back up, you probably will hit at least up to this point, which is not a lot higher. As you can see, this is probably 43.75, and maybe potential will go up a little bit higher, around that range. I don't see that we'll actually at 44.50. If you did hit 44.50, which is another 100 points rebound, then the next day you will target, and then will be probably going back to 45.50 point level. Okay, that's how you look at it. In terms of the technical perspective, you really doesn't need to spend a lot of time studying. I mean, there's stuff more juice into it and more technicality. But for most investors, that's good enough to know about the direct trend. Look at 50-day resistance point, 100 days resistance point, and what's the next mark going to be if we rebound. It's an interesting week. December dollar closed higher on Monday, which is the last Monday was higher than the previous Friday. Coffee energy gains also edge higher since Monday. Dow Jones closed higher Monday since last Wednesday, which you can see the trend here. Monday was kind of open a little higher, and and the thing is that all I'm trying to lay it out on all these coffee prices, energy is basically trying to really answer the question from a statistics standpoint about inflation. One of the risks about the stock market right now and the yield curve really is inflation. Whether that will be tapering in November or not, as the biggest consideration also, and another data look at is employment. The Dow Jones closed on Monday higher Wednesday, and also waiting for at that point was the lawmaker about the government shutdown possibility. More buyer pressure shows some of the small cap up 3% Monday. Global stock market were mixed in overnight trading on Tuesday, which is now talking about Tuesday. Asian market mostly weaker, European share mostly high up. U.S. stock index still a bit wobbly on Tuesday sharp losses, driven by lower consumer confidence, uncertainty about debt ceiling discussion. Congress market dropped Tuesday for possible 500 points for Dow Jones Industrial Average, and Nasdaq dropped more than 300 points. Raising government bond yield worried about energy shortage in major economy have the marketplace edgy. Nasdaq 100 overnight strength set the stage for steady or higher opening when the day section begin trading. Stochastic and RSI are oversold but remains neutral to bearish, signaling that sideways to lower price is possible near term. That just talk about how the market will look in Wednesday and Thursday. U.S. stock market closed mixed Wednesday. There will continue selling pressure, but yield curve drop a bit. Risk aversion had abated a little late this week until last week, which is until the U.S. stock market then sold off on Monday, dealing Thursday. The historical turbulent month of September is ending Thursday with the month showing trader and investor pumpy ride. Dow Jones closed high on Friday as it consolidated some of the weak sharp decline. Matrix release on Friday show a faster pace of growth than expected in September for U.S. manufacturing, ISM manufacturing, which is good news. NYMEX crude oil closed up $1.09 higher at 55.75.93. Prices closely the section high and saw a bullish outside day up on the chart, which you can't see the chart, but really, from the graph of the index, you can look it was picking a little higher. Gold is also retracing higher on 1757, silver higher than 2218. It also proved to be consistent effective in treating all rare and COVID, including widely dominant, highly transmissible data. Merck say it has already begun producing the new pill. I can't even pronounce it right. Monopiravir. The pharmaceutical giant expects to produce 10 million courses of treatment by end of 2021 and more doses in 2022. You will first provide 1.7 million doses from American pending emergency authorization for the drug from FDA. Closes above the 50-day moving average, crossing at 34,967.32, which is not where we're at. We're at 34,326. So need another 600 points to go to hit the 50 days average, which will be then for the first short term. They're proving that where we're at was already at the lowest point, at least for the short term, and that will extend the week decline. If you drop back to 33,613. So from where we at, if you go a little lower, first resistance point will be average at 34,967, which is what we're talking about, and then it will be. And evergreen issue wasn't greatly impact the market, at least what we seen last week, although failed to pay the interest. Chinese government had reinforced that incomplete apartment to be completed by the company, and so wherever we're going to resell and financing the company from the bank, will first spend the money to finish up what was incomplete. When Fed Reserve Chairman Powell said he has no intention of banning cryptocurrency during Congress testimony, just stated that China to intensify its crackdown by banning all related transactions. People were kind of anticipated that really cryptocurrency will be potentially be banned or will be replaced by by the digital currency by the nation. So I really exactly don't know how that happened and when would that happen or if it happened. Regulators, including Security Exchange Commission, all have been grappling with how to oversee the space. SEC Chief Gary Gensler has not been shy about criticizing digital assets, saying this month that platforms have become too large. Stablecoins are equivalent to poker chips, and crypto is not a viable long-term form of pirate money. Crypto players say they want to see two things: stakeholder engagement, regulatory clarity. However, that didn't really answer the questions, but anyway, regardless, Bitcoin has rebounded from the low of 41,000 to 47,000 again, along with ETH and other cryptocurrencies. And Mad Money Jim Cramer expect profit taking will waive on share as quarterly earnings, which will refer some of the worst day of the pandemic of release. So we know that this quarter earning again is reporting. Typically, before the announcement, market probably will have some hopes and probably will push it up. But as they release the earning, it could be maybe disappointment or come to realization of valuation. So potentially it will drive it back down. We have seen the last quarter that actually happened the quarter before as well. So with the history repeater, I am difficult to tell you because October normally is the worst month of the year. Which mid-October was the last the market crash. Soft drink and snack giant Pepsi will release third quarter earnings Tuesday, October 5th, before market open. And along with that is also Constellation brand, which do beer, wine, and spirit maker. And apparel manufacturer Levi's will also report earnings as well. Levi's actually have been pretty bad in last quarter when they reported earnings didn't meet where they were, and the market kind of stumbled. Because these days, I'm not so sure how many people wear jeans anymore, and if they do, are they wearing this brand or something else, replacement of other brand. The biggest switch to join the market down now is inflation. You can see a lot of items are getting more expensive. It's not just in US, but actually the rest of the world, and in Europe particularly, it's going to be cold weather coming, which have a higher pressure on the energy prices. On natural gas. I was told that it was researched 35% compared to a year earlier. So potential tapering, which investors anticipate to be in November, with dry market rebound if there's a delay. Increase of corporate tax and personal income tax rate is still on the table, but have not been bought much from the media lately. So in any of these passes, the market will have unwelcoming change, which I can't tell you when the corporate tax will be bringing it up again and when they actually be approved and executed. I already told you that this doesn't make heck a lot of sense because they give you some money for the relief and stimulus, which they tell the rest of the world, how generous they are. But in reality, if you look at the paycheck, if you look at the inflation, how more expensive you are buying stuff, I mean, you essentially paying back already. That it's really, not even zero-sum game. In the long run, you actually have a hit more than really have a help. That's why people were, really pushing powerful tapering. But at the same time, the job market still remain pretty sluggish, in my opinion. The percentage of 5.2 wasn't really well represented, and even fourth quarter normally, unless seasonal hiring for for retail, Christmas shopping, and so on, they call seasonal hiring. Which may be now paying a little bit better, $12 to $15 an hour to make people really will show up and work and support during that time. You still, compared to the average, you're still not looking good, in the market space. So, I still thinking, tapering may make sense, but inflation is really something have to be doing. Is tapering really the answer of the inflation, or some other measure, some other strategy that should be deployed to bring that? And at the same token, interesting enough, U.S. dollars get stronger. Which is an argument that, hey, is the economy really strong or not? And so something for the investor to think about. Because sometimes there's always two sides to make arguments, so there's no right or wrong answer on these. October is again a stronger, the most viable month for market. Though the fourth quarter often most profitable, it may be easy to look at your portfolio and measure risk of potential upswing against the downside. So, I mean, sometimes you look at where you're at now, the upswing could maybe another 10% to wrap up the quarter or the year, but yet the downside could potentially 20%. So, if that is truly the case on some of the stock that you're holding, you probably want to really take in profit right before the year end. You don't necessarily have to hold to a year end. If you hold to a year end, then you probably may as well don't sell it so you don't pay for the tax for the current year. But you also have to look at your tax bracket where you're at and to see what makes sense to you. So it's very difficult for me to really advise because everybody have a different preference, different tax bracket and position where they have tax exemption certain items that they don't pay as much. For industry sector perspective though, I'm still looking at sectors that were not historical high, even lower than pre-pandemic. So those are the one I mentioned. This time, just give you the sector rather than the stock. Travel, entertainment, banks. If you believe interest rate will be rising soon, the table will happen in November. Energy, especially on business in natural gas. You heard about the Europe natural gas prices higher. Well, they forecasting the winter will be colder than ever. If that is the case, you need more fuel to burn to keep you warm. So even they say U.S. is not going to be the problem, I still believe that the natural gas price is going up. So for these company, you really need to be careful. There's some energy company that were trading in natural gas. They could lose heck a lot of money if they're not positioned themselves well. You really have to be careful. You will want to buy company that actually generate natural gas, let me put it that way, okay? Not in the middleman trying to take the beat and ask the spread price difference between what the market and what the hedging or what the positions. Those typically more like, in my view, is more gambling. Chinese stocks, well, they already got beat up pretty bad, and with the national holiday right now, when we opening, we hope we'll have some more. There may be some more policy announced by Chinese government, but I hope those are really gearing to a positive improvement of the economy and the relationship between U.S. and the alliance or partnership with U.S. and Canada and Europe. So that should hopefully bring the stock to be better off than what we've seen in Evergrande situation seems to be more stabilized now, although you can see video people were protesting. I really don't know when these people went to protest, so you have to look at the timeline carefully. About government already announced that they're going to help to rebuild finishing the incomplete unit, so these people were impacted mostly still can get their apartment, but I don't know when, I can tell you that. But they didn't hire me to be the advisor to help look at the books of Evergrande and kind of restructuring effort. And hope they will strictly look at the numbers and what's going on with the people, emotions, and rather than politics, and they're taking over the place to really make a driving a wise decision to do what is the best for the company and for the people. And industrial sectors, I mean, if 2 trillion passing through, now 3.5 trillion is no goer. So you bring it down, if that. To me, I still betting about 1.6 to 1.8 trillion at the end of the day. If that's passing through, the market should have more money on the side. It should help. And yield curve goes up. I recommend before reconsidering if the yield curve go up, reconsider buying FAA and MG. The reason for that is, well, even though they make a lot of money, yes, they're profitable, but Nasdaq is still going to get beat up. So they are at Nasdaq, and Tesla will be one of them as well too. Vaccine related stock, given Merck news, which I just covered earlier, I don't think the vaccine stock will be continue to be as high as $400+. So you have to be very careful about those, because those stocks, if you look at the early of the year, what is the price of the development? I mean, they would potentially can be 50% off, right? Really, these stocks are very hard to really justify the value. And semiconductor stock also can buy, but only for short term. I don't believe the shortage of chips will be forever. I mean, if you see it's a long term, which means 2 years or more, well, I'm pretty sure that they would decide to build a plant and really producing themselves in US. But if you're only 6 months or less than a year, put it that way, any economics try to drive to build a plant locally in US would not really make sense. So then, even though we have this supply chain restraint, from the big picture, it's still a short term the way they're looking at it. If in another 6 months to a year, and obviously forecasting, think about it. Company would do a lot of forecasting for the following year. Now with the economy reopening, with the vaccine, with the Merck news, they really go back to probably double the demand, what they need. Then they will continue to produce as quickly as they can. These plants will run back 24/7 in Vietnam, China, or wherever the places they say they shut down and claim that it was slowing down. Cargo price will eventually go back down if there are enough more shipments, right? So it's just, I wouldn't use the word transitionary, again, depending on how you look at it, but some people argue 2 years still transitionary. I think I'm old. I'm not going to be left with another 2 years suffering of the economy, That's not going to do me any well. And there's an interesting story in America saying that American men, they perceive to be 2 years shorter in the lifespan now because of pandemic. Now, I'm just going to bring that up to you. You can research it. Right or wrong, I don't know because I'm not a scientist, right? But I can only tell you that is what they said. And for gold stock, I'll be in extreme caution over the next few weeks. I wouldn't buy those. And if you look at EV stock as an example, XPEV is staying around $35 away for at least another 7% slip before consider buying, and hopefully going again with better delivery quarterly earning, because these EV stock you see, they always make a gain before the earnings, because the earnings always get better than what they already forecast every year. But $35 seems to be still a little higher, in my opinion, XPEV. But if you work back last quarter, they jumped back up to $42, just to give you an idea. That's 20% profit, right? And Dow Jones seems to be very solid. Yes, rebound every time when you slip over 500 points. You've seen it even last month. It happened like that. The index rebounded same week. So there may still a few days for index moving on higher, but in second week or so, I would definitely pull back some of the stock position. Definitely will be very careful about that. October 18th will be a very important day. So anything in between, I would say that week will be, highly volatile and be in extreme care. Although I'm not in the advocate of day trade, market volatility provides a better advantage of profit. So, however, investors need to be careful. I have a friend that may buy a stock that makes so much money. I mean, he obviously put a high volume on there, so he make over like probably $15,000, but he bought another stock. He lost a $5,000 quick. So he's still a profit in the total position right now, but you can see they can win back and lose back. I heard another friend that he made $30,000 in less than a month of doing options and trading some stock. Well, he lost the 20 grand and 30 grand quick too. But during the time he made a lot of money, he sold them. He didn't have a work. So when I explain, you ask why people don't go to work. Well, if you get beat, rip off. I would say rip off the work. I use 50% of your salary. You used to work $100 an hour. So now somebody pay you $50 an hour, and you go and do stock market. You make $20. Let's say that. Would you still work? You probably would say, well, I'm going to take some time off. I'm not going to be hurry looking for a job. I'm going to relax a little bit, because day trade doesn't take a whole day. As far as I'm concerned, normally you may take half a day, 4 hours. So you actually double the $20 when you're talking about $40. And then somebody only pay you $50 for ripping you off. So then my answer would be yes, I'd rather stay home and not work. So that is another thing government doesn't consider, and understand why people don't go back to work, right? Obviously, you can have enough money to be able to trade. I don't ever recommend borrow money on margin, especially in a market that have high volatility, and people talk about potential crash in October. If you'd like to learn more about the trading strategies or recommended stocks that I had earlier, I will ask you to go back and watch my previous video. Again, if you have any questions, feel free to send me an email, or we'll try answering them. Have a nice and wonderful day, and hope next week will be another week that will help you to be driving to your target. Where you want to, how much money you want to make. Thank you.